Good afternoon, everyone. Today is Monday, January the 28th, and this is the Futures After 5. Taking a look at the broad markets, we were quite noisy today, as my thought was that we would slip back into, and you can hear this if you listen to the pre-market session, my thought was that we slip back into Thursday's trading range before finding ourselves a bounce. As a matter of fact, we lost the edge of Thursday's trading range and then began the bounce. Interestingly, the overall formation of the chart was bullish coming into the morning, but we started losing strength. And of course, these are the important things to consider. We start losing strength after we slip past these critical areas as defined before relative resistance. That's what this octagon is right here. And then our move into known support. But what it did do is keep us right up over the top of this diagonal. So interestingly, it still looks a bit bullish. Now, I'm not really sure about how well that's going to hold overnight, because that's really what we're discussing here. What do we look at overnight? So let's delete this. Let's delete these lines to give us a little bit less noise. And let's take a look at what we're seeing on a regular 4-hour chart. Now, some people don't like the use of a 4-hour chart. I happen to love it. I think it does a great job, and to each his own. So here is this region. I thought it was 27. It looks like it's probably about 25. It's coming down a little bit lower. Still an auction vacuum here. The price points filling in. We've got updraft and then flat to updraft, looking at the moving averages. We have relative breakout into resistance, and that resistance area is still at about the 70 zone, and we have resistance areas that are going to turn into new support if we can get up and over them. So where are we headed today? Well, the first place we're headed is really frontline congestion, and that's 2643. We're holding that zone in the overnight. Here's the thing. If we can stay above 30, we should get up into this resistance zone at 51. We have the jobs numbers coming in on Friday. We have FOMC tomorrow. We have a few of the earnings start to guide a bit lower, and then heavy tech releases, tech earnings coming in later on and over the next week. So we've got a lot of things that could make the market gyrate, but to me, it's still landlocked. We've still got 25 to 70, and our positioning is still bullish overall. Particularly if we take a look at the daily chart, we can see that we are still trending up, holding support. If an instrument breaks the trend by time and not price, all else equal, we will move into the next area of resistance. And so that's calling for higher levels still up around this zone. Hard to say what's going to happen here, particularly with the Fed. Certainly they're not going to raise rates this next time around, but it's what they're going to say from a language perspective that's very important to us. Again, if we get up over 2647, we're likely to grind our way into 2655 and then 2663 and then 2670. All right, so work through that in the evening. We ought to see some fairly interesting rhythms that we can take advantage of, knowing that this is support. And if this comes down, it's better to wait for it to bounce and then pull back and hold, instead of being a hero, a dragon slayer, trying to catch the bottom. And so you can get in there once it cycles back and gives you the higher low, and you're in like Flynn. All right, let's take a look at the NQ. Same sort of thing. Faded quite a bit, again, below Thursday's low, which is where I thought, hey, listen, at least we're going to come back into Thursday's range, and then we should bounce from there. But this drift lower really did throw me a little bit for a loop, because I felt like it shouldn't do that if we were having a lot of strength. That being said, we did bounce as normal, and then we closed the day up and over the volume point of control, and that is a little bit bullish. So we'll be back in this low volume area. Pullbacks ought to still give us buy zones. We've got bullish action here after a deep fade. So we are essentially landlocked. The song remains the same. Again, if you're looking at your trading mechanics and you're looking at your stocks and you're saying, oh my goodness, what should I be doing? Your stocks are going to follow this same kind of pattern unless they're in a special breakout area. And when they collide into known resistance, do not expect them to have enough strength to carry through on their own this way. All right, it's just a very difficult thing for them to try and do, the stock itself, because they're going to need the market to give it a tailwind, right? Something to help push it along wherever it's going. This, we're holding right above the VPOC. We can see all of this. Pullbacks ought to be buy zones. This moving average is quite bullish. We're far away from it. There's a lot of downside possible here, but the pullbacks still ought to be bounces. As you can see from today, the pullbacks can be deep, so you can really end up trading any way that you want to, long or short, just so long as your eyeballs are really looking at support. Same sort of thing here. We are in the H contract. This morning I was in the J contract, but same sort of thing, pullbacks or buy zones. Upside pressure showing. We have broken this moving average, but that's not really saying much. What's going to be a big deal is if it fails this edge. Now, tomorrow is the tomorrow is the API after the close. We've had a lot of things moving around with the dollar. It doesn't really seem to be affecting oil the same way, but we can clearly see pullbacks are buy zones. A little bit harder to see where the sell zones are on the upside, but we certainly can see the pullback action holding. And if we cannot stay up and over this edge, and indeed we cannot get up over the VPOC, this chart is going to take another leg lower into the volume profile that's got 50 on its edge, which is going to be very contrary to the way a lot of funds are positioning. They are positioning themselves long over the long haul and into the forward contracts. Taking a look at gold, the beast that is gold. You know what? This one has been really straight up pullbacks or buy zones. Today it moved mightily up back into the space after losing this region in the early part of the day. It pulled back and then bounced. That's what we expect, right? I talked about that this morning in the pre-market edition. We expect it to pull back, find buyers, and then move up ahead, and that is exactly what this chart did. If we want to take a look at it on the 30-minute, we can see what it did right here. It pulled right back into the 96 area and just headed on forward. It did that bounce at 7 Central, and it never looked back. It was absolutely incredible. Now, everybody's sitting here. I've got 1312 as an upside target, but we can clearly see here that what we are building is a bit of negative divergence. This one might be running against itself. So what we would see is any punches to the upside still going to break down for us to higher lows. All right, that's it for the futures post-market edition, and I'll see you all tomorrow.